Let's kick off this explainer with a pretty mind-boggling question. How exactly did a 2012 idea born in a two-bedroom apartment transform into a literal foundational pillar of modern global finance? We're looking at a company that started with the incredibly simple premise of just helping people buy and sell Bitcoin, and is now positioning itself to be the ultimate financial super app. It is a wild story. It's all about navigating extreme market volatility, making highly aggressive operational pivots, and surviving some truly existential regulatory threats. To really wrap our heads around the sheer scale of this evolution, get this. By late 2025, Coinbase was holding a staggering $516 billion in digital assets on its platform. $516 billion. That includes nearly 12% of all the Bitcoin currently in existence. So yeah, this isn't just a plucky tech startup anymore. It is a colossal custodian of capital that completely rivals traditional financial institutions in both its reach and its asset base. In this explainer, we're going to trace that calculated growth. We'll explore the immense volatility they've weathered over the years and dive into the sweeping operational pivots that fundamentally define the company's survival and success over the last 14 years. We'll basically see how they evolved from a simple Bitcoin wallet into what they are now calling the everything exchange. Our agenda today covers 5 key phases. 1. From startup to unicorn. 2. The remote-first IPO. 3. Lawsuits and global expansion. 4. The base ecosystem. And 5. The everything exchange. Section 1. From startup to unicorn, the origins of a crypto empire. Their early trajectory was incredibly rapid. Picture this. It's 2012, and Brian Armstrong, a former engineer at Airbnb, takes a $150,000 cash infusion from the Y Combinator startup incubator. Now, at that time, getting your hands on Bitcoin was notoriously difficult for the average person, so they built a simple, compliant on-ramp. And that laser focus on user experience paid off fast. They hit 1 million users by 2014. By 2018, they weren't just a basic exchange anymore. They were launching Coinbase Ventures, essentially planting seeds across the entire blockchain ecosystem to make sure they had a permanent stake in the industry's future. But you might be wondering, what was actually driving this rapid expansion? Well, according to an EY report, their core mission, right from the beginning, was to update a century-old financial system. They literally wanted to create economic freedom on a sweeping, massive scale, targeting over 1 billion people. They positioned themselves early on not as these rogue tech disruptors, but as a conservative, strictly law-abiding platform that massive institutions and everyday people could actually trust. Section 2. The remote-first IPO. Radical shifts in operations. A massively crucial pivot came during the 2020 pandemic. Unlike a lot of companies that just temporarily sent their workers home, Coinbase took it to the extreme. They completely abandoned their traditional physical footprint in San Francisco. They shifted entirely to a remote-first, headquarterless philosophy. And this fundamentally changed how they operated. It was a major structural pivot that let them hire globally and scale rapidly, entirely free from the geographic constraints of Silicon Valley. It essentially altered their corporate DNA right before they entered the public markets. The financial data from their 10K reports reveals the mind-blowing revenue volatility they experienced right around their April 2021 IPO. Just to put it into perspective, there was a huge jump from $1.14 billion in 2020 to a massive $7.84 billion in 2021, right in the middle of a massive crypto bull run. But then, as the infamous crypto winter set in, revenue plummeted all the way back down to $3.19 billion in 2022, resulting in some pretty significant net losses. This wild swing is absolutely crucial to understand because it highlights exactly why their entire strategy over the next few years simply had to focus on diversifying beyond pure retail trading fees. They desperately needed stability. Section 3. Lawsuits and global expansion. Navigating regulatory turbulence. Looking at the regulatory landscape, things got incredibly tense. The U.S. Securities and Exchange Commission's 2023 lawsuit created a total existential threat for the company. The SEC basically accused them of running an illegal exchange, broker, and clearing agency by facilitating the trading of unregistered securities. Now, this legal battle hung over the company for nearly 2 years. It finally ended with a dismissal in February 2025, following the transition to the Trump administration. But importantly, while that lawsuit was active, Coinbase couldn't just sit on their hands and wait for a resolution. They had to act. Directly in response to that U.S. regulatory crackdown, Coinbase executed some very strategic international pivots to ensure they could survive and thrive on a global scale. First, they established a significant IT and operations presence in India. Then, They launched the Coinbase International Exchange, which is a licensed derivatives platform down in Bermuda to serve non-US customers. And in a monumental $2.9 billion deal in early 2025, they acquired the Dubai-based derivatives exchange Deribit. They essentially built this massive regulatory moat around themselves by aggressively expanding outside of US jurisdiction.
Section 4. The Base Ecosystem. Building the on-chain infrastructure.
So in 2023, they launched Base. This is an Ethereum Layer 2 network incubated entirely in-house by Coinbase. Now, why does this matter so much? Well, because instead of just being a centralized exchange where you buy and hold tokens, Base leverages Coinbase's vast distribution advantage. It seamlessly routes traditional finance users directly into decentralized applications. The goal here is simple: lower the fees, increase the speed, and make the complex, sometimes clunky world of Web3 feel exactly as easy as using your standard everyday banking app. And the organic growth was just explosive. By May 2026, Base's total value locked, which basically means the total amount of assets actively deployed within its network, skyrocketed to an estimated $12.8 billion. And this highlights their absolute superpower in the market. This growth wasn't driven by paying people to use it with aggressive token incentives, which is what a lot of networks do. It was driven almost entirely by the smooth integration with Coinbase's existing product ecosystem, which, remember, already serves tens of millions of active users.
Section 5. The Everything Exchange. The Vision for 2026 and Beyond. CEO Brian Armstrong mapped out a massive three-pillar strategy for the future. First up, expanding beyond just crypto into equities, commodities, and prediction markets. Second, scaling up stablecoins like USDC for everyday global payments, moving way beyond just using them for trading liquidity. And third, utilizing the Base network to build an on-chain super app. Basically, they are aiming to create a single interface, very much like Apple's closed ecosystem, where users can seamlessly manage their Apple stock, their Bitcoin, and their everyday stablecoin purchases, all without ever leaving the Coinbase app.
And this isn't just a pipe dream. A report from DBS Bank actually validates this exact strategy. By diversifying their recurring fee base, specifically through things like stablecoin interest income and their Layer 2 network, they are finally providing a vital cushion against the wild cyclicality of crypto prices that we talked about earlier. In fact, subscription and services revenue actually reached a record 44% of their net revenue in the first quarter of 2026. It's a real game changer. When you dig into their Q1 2026 10Q filing, you see exactly who is driving this new era. Institutional volume hit an incredible $166 billion, which completely dwarfs consumer trading at just $36 billion. This proves, without a doubt, that their pivot toward becoming a foundational capital markets infrastructure is actually working. They aren't just a playground for retail day traders anymore. They're the core custody and execution layer for the biggest financial players in the entire world, including massive legacy asset managers like BlackRock. They're even breaking into alternative asset marketplaces. In 2026, they announced the launch of pre-IPO trading through perpetual futures. What does that mean? It essentially gives everyday retail investors outside the US a way to get price exposure to high-growth private companies like SpaceX before they ever hit the public stock market. Historically, that kind of early access was totally locked behind the gates of venture capital and ultra-high net worth individuals. But Coinbase is using their blockchain infrastructure to kick those doors open to a much broader market. Which leaves us with a fascinating final thought to consider. As Coinbase strives to become this ultimate everything exchange, aggressively moving into traditional equities and pre-IPO markets, will they actually conquer traditional finance and become the world's default financial app? Or do they risk losing their unique identity, maybe diluting the pure crypto ecosystem that made them a $500 billion powerhouse in the first place? It's an absolutely incredible evolution from a simple Bitcoin wallet, and for sure, it's a transition that is going to shape the entire future of global finance.